If you asked me 2 weeks ago what the Fed would be doing tomorrow, I would have an exact answer for you. However, over the past 2 weeks, things have matured and progressed in such a direction that the uncertainty leading up to tomorrow's FOMC is the highest it has ever been. The Fed have been on their most aggressive rate hike path in history, which could be coming to an end tomorrow, given the fact that we have seen an unprecedented bank run with several banks in the US and in Europe, being Credit Suisse, going under. Is this all coming to an end? Has shit officially hit the fan? Let's break that down in today's video. And it all started about a week ago with SVB, Silicon Valley Bank, where individuals lined up outside the bank to form a bank run. A bank run is where individuals go and try withdraw deposits they have with a bank with the hopes that those deposits are still whole and that money is actually there. And that is the fear with the whole banking sector as a whole, and hence the rally in gold, hence the rally in crypto over the past 2 trading weeks with the uncertainty and the doubt in the current banking sector. Who do you trust? Do you trust little banks? Do you trust the central banks? Right? Should you even have any trust in them at all? We saw the SNB, the Swiss National Bank, having lost over $100 billion in the year of 2022. 100 billion with a B. Right? So where is your money safe? Right? Is the traditional finance route finally coming to an end? Should you invest your money into a bank? Should you even have your savings in the bank? That's the question. The question is now unraveling, with the Fed assuring that depositors will be made whole amidst this crisis, with the Bank of England, the ECB, the SNB all pitching in to ensure that dollar liquidity will be there, to ensure that they will help should there be dollar liquidity issues. So, where do you park your money? Is this all because the Fed have been on their most aggressive rate hike path? Is that coming to an end? Is it time to be long risk? Right? Should you be long risk because China's reopening amidst a possible World War III threat? You got China and Russia coupling up together. There is a lot going on. There really is a lot going on, and it is by definition a macro shitstorm because you don't know who to back. And as I have been mentioning in my live calls every single morning, as a trader, your job should be to look for value where value can be found. And more often than not, in times like this, value can be found by not being in any positions at all. Right? I have been calling XRP the past couple of weeks in the group. Massive 20% rally today, which we're going to run through shortly. But the question remains, as a trader, right, should you be in a position every day? Should you be in a position every week? The answer is no. The answer is simply no, because with all this uncertainty, all this doubt, if you asked me 2 weeks ago what the Fed would be doing tomorrow, I would say at the very minimum a 50 basis point hike just to solidify what they have been doing. Right now, I'm not even sure they're going to do 25. And that's just a 14-day difference. Right? Forget about forward guiding. Forget about anything. A 14-day difference has changed the potential macro view. And with that being said, you really want to ask yourself, are you going to be a short-term bear or long-term bull? Right? Are you buying dips right now with a potential, 20 or 30% downside? Because that downside is there, right? Especially in the crypto space. Or are you looking for the upside, right? Are you looking for the upside for that greater yield? And that should be your focus, right? Look for value where value can be found. But without further ado, let's jump onto the charts and run through what you can look out for ahead of tomorrow's FOMC. Let's go. Right, dollar index. Dollar has been a good little favorite of mine over the past couple of weeks. We have been buying dollar dips, especially the beginning of, towards the end of February, beginning of March. It really aided us with some opportunities, shorting cable, shorting euro dollar. And, price has now, in my opinion, overextended itself ahead of a macro event of such like the FOMC tomorrow. You want to look for value where value can be found, and that means looking for the risk reward on something. If I look at dollar positioning right now, I may be completely wrong, right? That possibility is there. Hence, you're obviously going to have a stop loss in place in your positions. Looking at something of such, should the Fed unwind the uncertainty we've seen the past 2 weeks and still go ahead as planned, like Fed Chair Powell testified in Congress, saying he's going to continue to raise rates, he's going to stand by his word, and you are going to see up to 2 million Americans lose their jobs in the year of 2023. If that narrative continues, if that hawkish stance continues, dollar's going to be bid, right? Dollar's going to be trading higher. Our risk reward there would be in the likes of short in the euro, right? Short in the euro, I had this fib drawn on this morning, which we've actually bashed straight through. Now I'm going to leave that on there, and I wanted to leave it on there. I was about to delete it when it actually invalidated, but I left that there to actually have a lesson here. You know, it's not about where you want things to go, it's about where it actually is. And the lesson, and with these highlights and marks that I have on here, it is to show you that it's not about where you want something to go, it's about where it is for face value. And you got to ask yourself, is it ready to go lower yet? Right? Me looking to short euro dollar is me looking for euro weakness, but more importantly, some dollar strength. Right? If I am looking for dollar strength and price hasn't broken to the downside yet, should I even be in this? Right? Should I even be looking for shorts on the euro yet? Right? Or should I alternatively wait for that move, right? Wait for that euro weakness, wait for that dollar strength, and sell the rallies. Sell the rallies because I'm guaranteed a position, right? Each and every one of you watching this right now know that throughout a whole trading month, you have, one or two of those positions, right? They just hit the sweet spot, right? I call them stingers, something that just runs into profit, right? No need for you to wait. Nothing runs into profit. But if you really identify the characteristics of those trades, you will realize the higher time frames in your favor, the lower time frames in your favor, and you're selling the rallies or buying the dips in current momentum. Very little drawdown, quick to run into profit. Those are the types of trades you essentially need to be looking for. And especially leading up into an event like tomorrow, we want to ask ourselves, are we predicting the impossible? Are we expecting the impossible? Or, are we actually looking for a valid position? Right? Me trying to buy dollar tomorrow, looking for some sort of position on dollar, it means I favor what Powell said in Congress 2 weeks ago. I'm not letting the fear and the uncertainty of this most recent 2-week fiasco, lead me to think the Fed are going to pause, which I may be completely wrong, right? Let me check my crystal ball. Oh, wait, I don't have one. Right, I don't have one. No one does. No one knows what's going to happen. You as a trader need to look for value where value can be found. And for me, that maybe in the likes of, sure, in the Aussie, I think, is probably finished. But more so the euro, right? More so the euro. Should we have any sort of price action of such tomorrow, then I favor being involved. I favor being involved in a short. I mean, look at gold. Gold landsliding out of the highs. Really looking at this on the higher time frames, that fib's a bit skew there. Looking at this on the higher time frames, one of my traders in the mentorship asked me, where should you be buying gold? Should you believe in the fact that the Fed is going to pause? Right? Should you believe in the fact that this contagion in banks is going to continue? Your whole bet should be, to buy on a weekly low where that weekly low may be formed. I mean, looking at gold on the weekly closed so aggressively bullish, right? It went from, sub 1875 all the way up to 1987. So over 1,000 pip move in 1 week, right? In 1 week, it rallied over 1,000 pips on this whole banking crisis. Gold feeds off all of this because it's that hedge, right? If you don't believe in the dollar, if you don't believe in the banking system, what would you rather have? What was before all of this? The gold standard, right? It's the gold standard. The same with BTC. BTC, had this massive rally all the way from the lows of 19,500, right? All the way up to 28. massive $9,000 move on Bitcoin, do you trust the banks? What would you rather have your money in? Same thing as XRP. You know XRP, ISO 2022. You know, do you believe in that? Right? Do you believe that, you know, XRP will facilitate CBDCs? They will facilitate payments. You know, I'm all for that. I'm all for that. I like XRP from where it is. Even from where it is, it's still a cheap price, 45 cents. In the grand scheme of things, you could very easily 5x, 6x, 7x, right? Don't look at this most recent rally and be like, fuck, I've missed it. I'm not even going to get involved. I've been speaking about XRP around 34, 35, 36 cents in my group every single morning. So if you're not in that, I hit the mic over there. A bit over enthusiastic with XRP. But if you're not in the group, get in the group. You know, what are you waiting for? Interact with me every single day. You know, ask me what you want to ask me, and I share my trades. If I'm in a position, I'll tell you about it. If I'm not in any trades, I'm gonna tell you about it. Right? As a trader, you gotta look for value where value can be found, and that often is sometimes in not being in positions. Last week I had no FX positions, nothing. I had XRP. That's it. Right, I've taken Euro Yen this week so far. You know, pretty much about 10 pips in drawdown at the moment. Let's run through it. You know, I like it from where it is. I favor lower pricing, and I have said, you know, with a target to review. Open-ended target. Let's see what price does. Should price fall from where it is, I like it, right? But if it doesn't, stops you out for that mere 30 or 40 pips that you're going for, leave it. On to the next, right? On to the next. That should be your focus over there. So at the end of the day, you know, looking at commodities, looking at silver, is silver your hedge, right? Looking for value where value can be found. There is a greater risk reward on silver upside, you know, than gold. Gold is already $2,000 an ounce. It may be out of reach for some. Although you can buy small amounts of gold, right? Physical gold, bullion by post. Shout out over there for them. I use them. Great website. Should you be buying silver? $22.30 an ounce. Not bad. Right? It's not bad. Right? Most of you spend that on a train ticket, on a couple of beers, on whatever your thing is that you do. Right? Whatever that thing is that you do. So for me, you know, it's being long something that I can have my exposure to, but something I fully believe in, something I'm fully convicted in. I believe whatever you're investing in and putting some skin in the game into, you really should be convicted into that asset class. If you fully believe in crypto, do your research, have full conviction when you put money into it. But at the end of the day, you know, if you're looking for an alternative investment instead of crypto, look at commodities, right? Look at bullion by post. Buy a couple of ounces of silver every month. You know, put it there aside. Forget about it. You do that with your money in the bank, and the question is, what does the bank do with that money? Right? What does the bank do with that money? You know, it really is something you got to ask yourself. Crazy, crazy times ahead. But FOMC tomorrow, right? Federal Reserve scheduled to raise interest rates 25 basis points currently. Are they going to do it? Are they going to do it? That's the question. But small little breakdown from me. I like dollar from where it is, right? I like risk from where it is. Something I forgot to cover. The S&P 500. I put this risk reward out there on my live call. I haven't taken it yet. I do favor a bit of a break back below 39.75. Bit of a retest of that before then actively entering short on this, hopefully for lower pricing. However, should the Fed keep rates the same? Right? Should they keep rates the same and not really what we're expecting? We may have a brief relief rally in risk. You may have, you know, 40, 50 revisited on the S&P. I've been short of the S&P the past couple of months. You know, and I have been mentioning this live every day. I do favor selling the rallies in risk. But should the Fed pause now by any means necessary, we may see a bit of a relief rally in risk before the overall contagion being priced in. That is something I'm afraid of And I do think it's going to take a lot of people by storm. Right? Even, the crypto market now being that relief rally hedge. The total market cap is 1.14 trillion and has grown by 300 billion the past couple of weeks. Right? That's money coming in thinking, yeah, fuck it. I got, let's just use for example's sake, you got 10K in your savings. Some people are like, fuck it. My money's maybe not safe here. Let me put 5K into crypto. That's a hedge. That's a hedge. Let me buy some gold. Gold's rallied, right? 1,000 pips in a week. You really want to ask yourself on what side of the fence you're really on there. So I like it. I like crypto from where it is. I do still think we are in the infancy stages. I have fully believed in crypto for years. I've lived through 2 bull markets. I've lived through 2 bear markets. So I've seen it all, right? I've seen it all. So obviously, don't test the depth of the river with both your feet. Don't throw everything that you have in, expecting it to moon every single day, because it's more than likely not going to. It's going to do your head in a bit. That's the nature of the market. It is a brand new market. Bitcoin was made after 2008. It hasn't seen a recession. We do not know how it's going to react with bank runs. We do not know how it's going to react with a global recession that's in the loom. So put your money in carefully, right? Don't throw everything that you have in, and just treat it as a hedge to having your money parked somewhere else. That's all you got to do, right? It is not going to make you rich overnight. If you think that's the case, just stop now, because you're more than likely going to lose everything, right? So, yeah, that's my view. I do expect the Fed to hike, more than likely 25 tomorrow. But I do like gold. Gold, pretty much, I'd leave gold. I do like the S&P from where it is, and I do like dollar from where it is. Gold, leave it alone. Right, we may have a bit of a further washout. But if the contagion continues, and if the Fed pauses tomorrow, all-time highs on gold. Right, all-time highs on gold. However, should the Fed hike tomorrow, contagion fears wash out. I mean, UBS are trying to buy Credit Suisse. Should that wash out a little bit? Watch out for gold. We're going to see, sub 1900 very, very quickly. Right, very, very quickly. It's already down 380 pips on the day, almost 2%. It is something that, it would have trapped a lot of people to buy on the high. And now, they're down, 600 pips if you're on margin. But people buying this, the traditional finance world, wouldn't be on margin anyway. So, yeah, that's pretty much it for me, really. If you've watched till now, appreciate you. Do stay tuned. I am now back in the den, so I'm going to bring in a lot more content your way. Do like, comment, share, subscribe, drop a comment below, all the good stuff. And I'll see you in the next video. Take care. Bye-bye.